Hello, welcome to another episode of World of Oil Derivatives. I'm the Chief Executive, Onyx Capital Group, Greg Newman. I'm with Harry Campion, who directs our brokerage, and Ehsan on the research side. So yeah, today, slightly different team. We're going to still talk about markets. However, Harry, you haven't been on before, have you?
Nope, not on this one.
Last time was a while back, previous season.
Yeah, we did one together. And
Yeah.
I've done some with the guys on the
And then we
brokerage
did a clip that mugged you off.
Yeah.
Do you remember? About,
Yeah.
Cool. So thanks for coming on. Yeah, I think we just cut straight into it. Do you want to just give a summary, Ehsan, what's been going on, flat price and all that?
Yeah, so today I'm going to talk about the distillates market generally in the US and in Europe, and the positioning, the price, and then what do we expect to happen in the distillates market in the near future.
Okay. And Harry, you want to talk about Naphtha, right?
Yeah, I've just been chatting to some customers about recent Naphtha strength and how it's going to manifest itself in the winter.
Yeah, no, that's a good topic because it's
blending. I actually had some questions to discuss.
Yeah. Cool. All right. Well, but headline of what's been going on, Ehsan?
Yeah, I mean, market has been fairly boring. It's still trending up. In terms of flat price, there's not a huge amount of change in terms of CFTC numbers. There's been a bit of a profit taking in the positions from the money managers, but nothing too significant. But from May onwards, we've seen a good buildup of length from the money managers, and also we continue to see a good amount of prod merc selling in the products. But it doesn't seem to be affecting the prices, however. So in RBOB, in gas oil, and in ULSD, prod merc long to short ratio has been going down, which means there's been more short selling. However, the price keeps on going up, and technically as well, the prices are very far away from their moving averages. And I'm going to talk a little bit about gasoline as well, and what happened to gasoline. Maybe if I can share my screen. I think there was a hiccup in the gasoline prices in the RBOB crack. What we saw was at the beginning of August, there was a bit of a profit taking that put pressure on the prices, and we saw that the shorter term moving average was crossed. However, the market is back up again, and what my thinking here is, that married well with the positioning, etc. And now looking at the distillates market, and specifically ULSD and gas oil, are we going to see the same thing or not? It's been a couple of weeks that there's been a good build up in the length for these markets, and if I quickly show some charts on that too. This is the ICE gas oil contract that's been rallying quite non-stop, and money managers positioning has been continuously on the long side for this contract. And also I think a good flashback to what we chatted about, I think it was around May, Greg, that there was a really big build-up of shorts, and we were talking about market is getting quite complacent about now positioning short in these gas oil contracts, and back then it came under a lot of pressure, the gas oil cracks. Since then, I think we alarmed everyone in the podcast that this cannot sustain, and we saw a quick flip over the last 8 to 12 weeks that they continuously reduce their short positions and add on more length, and now we see a lot better strength in the distillates part of the barrel. And some of it, I guess, is to do with the hopes for soft landing on the macroeconomic landscape, and people gaining confidence that we're not going to go into recession. So there is going to be need for industrial hydrocarbons such as diesel and gas oil. I don't know, what are your thoughts on that? Do you think that this rally can be sustained on the gas oil side of thing, or the diesel side of thing?
I think Audrey was saying something last week. It looked more of a technical breakout on low liquidity, probably dragged up by other contracts, and ultimately no fundamental underlying story for the bull stuff, really. If anything, more refiners online, more product online. I guess obviously the net supply cut on the crude side is obviously going to help. But I think it doesn't look, at least, like there's much of a direct driver in gas oil. So if anything, it's just vulnerable to new positioning to some respect to stop people out. And that's probably I think it's just telling you like the market's too short ultimately, isn't it? Like it's nuts to be able to say that given where we are, but that's effectively what you're saying as well, right?
I mean, like
everyone's short. There's no underlying fundamentally bullish story.
They were short, like for a few.
Then they stopped out
weeks, and then they stopped out. You know,
and they got short again. That's what those stats are saying, aren't you?
I think the prod mark is getting short.
Yeah.
Right, and like people are just like, you know, the end users are selling and trying to lock in these margins,
yeah,
but it's not having
selling
an effect.
back of margin. Of hedging, right? End users are selling back out their hedges.
But this is not really like putting that lid that usually does on the
which
prices.
Means that the market's too short. Is what I'm trying to say. So as in like everyone who could sold has sold.
Yeah.
Otherwise the market wouldn't be behaving like this, right? That's why you don't need to do that much analysis. It's like how much volume was there? Yeah, not much, barely any. Yeah, it moved up quite a bit, and it's on this bullish momentum. It's like a technical thing. That's why technicals exist, because they're just a reflection of the market state, right? And ultimately, no one seems to be able to sell anymore, so it just has to drift up. And the overall market across the oil barrel is a bullish momentum, right? So, yeah, I think it just keeps going until there's something pretty concrete in the market. But either way, I can't see there being like a massive sell-off if the market's already short. So
I was going to say, do you think the like gasoline market is helping to kind of prop it up a bit?
Yeah, I would say so.
And if gasoline is like the driver, then
this is what people miss, this whole like interconnectivity, right? You understand this when you were trading. Like RBOB, people say, what's RBOB got to do with gas oil? But have you looked at the RBOB heating oil diff, right? That's a diff that trades a lot. RBOB to heat trades a lot. Gasoline, lots of people trade gas oil versus distillates. Sorry, gasoline versus distillates. So if RBOB goes high and there's loads of buying flow, but then people like the gasoline versus distillates, by them selling that differential supports distillates.
Yeah.
So it could quite easily be that. It's a good point. That could be where the indirect but ultimately direct buying flows is coming from a differential ultimately.
And also just like, I guess, general sentiment as well. If people are buying RBOB because, like you say, you're in a bullish momentum, then, you know, if the gas oil futures are an available thing to speculate on as well, then it's just, you know, it just gets dragged up by general sentiment as well. But
cool.
yeah, I feel like kind of gasoline is still driving it. I'm not sure if gasoline had a big wobble that gas oil would be that resilient.
Yeah, and at the end of the day, like, it is always crude for OPEC cuts and kind of products for refinery activities, but ultimately they are linked, right? There's just a lead lag relationship. So you've got a hell of a lot of products that hasn't been able to be produced because of less crude. That is a fundamental underlying physical story that, you know, why would you not be bullish? If you're bullish crude why would you not be bullish product? I guess would be my argument, unless you think there's just so much product coming online because of the refineries coming out of turnaround that it's just going to overwhelm. But then if there's not enough crude supply, then how's that possible? That's why fundamental stories to me don't really mean anything. They're just people attach meaning to these stories. So I'm saying back, okay, then there's no story for selling gas oil in effect then by going off the logic of like OPEC cuts or whatever.
Yeah.
But having said that, if OPEC cuts were to unravel, then probably the best trade actually, I think, would be probably to sell the product margins first rather than just necessarily being structurally short crude. I think there'd be a bit of a lag in the underlying fundamentals. But anyway, you can debate it all you like.
Yeah.
The only thing that's really important is how people are thinking about it. And I haven't heard anyone talk with any conviction on gas oil for a while. So
do you think people are pricing in some kind of like winter?
I don't know. I just don't think it's that
gas
deep. I think you
and
said it. Like it's probably moving around on diff movements and like holidays and like liquidity droughts, and then people trying to attach meaning to that. And it's like, well, no one's really that. If someone come out and be like, gas oil needs to be plus $40 per barrel because X, Y, Z. No, they're not. They're just indifferent, right? So it's going to get dragged up, like you say, by macro moves in RBOB or crude or whatever. Which is interesting about the Naphtha, because that to me is a much more interesting topic, because we were here 6 weeks ago being like, Naphtha is the doom of the barrel. and that's driving this whole weakness. And it's the evidence that at the time we were oversupplied in crude because no one wanted the WTI Midland barrels because it's all naphtha yielding. And it doesn't matter how much you cut, if there's enough net supply, the North Sea will still be weak, given it prices to light sweet. So naphtha was just such a dog. Everyone was so short it. I think people did initially very, very well out of naphtha being short. And then the classic thing is, right, even though you got every single bearish story in the world, everyone sold, it's a good time to buy.
Yeah.
It's basically what's happened, though, in the last few weeks.
Yeah. I would assume a lot of that is people trying to make like profit take.
Yeah, but it's been so steady. Like we've got our WhatsApp channel, you know, the research service. It's like twice a day, the traders will say what's going on in their market, like a short summary. And every time I look at the naphtha crack, like every day it's like, oh, it was minus 16, oh, it's minus 15.50, minus 50. And you can just see this trend without even having to see a graph every time. So yeah, I think people were saying stories like, yeah, it's a bit short covering rally, a bit profit taking, but then the trade houses are going to start getting short again because there's no demand story. And then that didn't happen. And the latest I heard was, yeah, it's being dragged up because of gasoline, which does kind of make sense because of the gas snap. But yeah.
But so like blending demand, gasoline blending demand is the only like fundamental story that has any kind of weight to it. But that's why I was saying my question is like in the winter is if they start using butane more as a blending component, then where's the story for naphtha? Because all I read about is on the petchem side is crackers shutting down because the margins were terrible before and they're even worse now. So the only thing is for crackers to shut down.
That's the fundamental story. I think what I would say is, at least when I've looked at naphtha since started trading, is it was always quite regularly about Q1 MOPJ. So there was always some kind of bullish look at, you know, Asia. One of the majors in particular was always keen to buy naphtha around that time, and you see build up a positioning towards the end of the year ready for Q1. That was like the most common thing. So this is another thing about the interconnectivity of oil, like the financial oil. If people are positioning long for Q1 expecting some kind of support, then it can drag up the whole curve. Because if there's just no action at all in the other curves, then everything will respond as a differential to that key flow. So if everyone's buying Q1 cracks in particular, which I think is the trade historically, then that can easily drag up the front right now. Plus you've got the gasoline blending, like you're saying right now. So it's just all a function of like,
especially in a market like naphtha, which is
the low capacity,
lower
volume.
Kind of capacity.
Exactly right. So it can get whipped around, and then you just need someone to attach a fundamental story to it to get the herd interested in buying naphtha, and I'm sure it'll run away with itself. And that's probably what's going to happen because it's been on a really good trend and it looks like it's continuing.
Yeah, just to touch on that, I think it would be good to actually show something, you know, quantitatively off the back of like what you guys just said about, especially like people positioning in, you know, Q1 naphtha. If this is on the screen, we can see in the last 7 days for January, Feb and March, market is very much skewed towards the long side. And like on an overall basis as well in those tenors in Q1.
Wow, this is when? This is Q1?
This is Q1 naphtha crack. Okay. So
you
can already see that like people, it makes sense to do it. People are actually placing bets there and they're building up that length. And one other thing as well, like especially
open
like
interest is still low as well.
Open interest still higher than the last 5 years.
Yeah,
so
but
like,
I mean, as in relative to the capacity of what it can hold.
Yes,
There's a long way to go on the cycle, but it's above.
Like it's 2 million above
average.
the 5-year average.
Yeah,
so like it's quite significant, especially in a market like naphtha, which is quite a small market. Like 2 million barrels higher than 5-year average is very, very significant. And you know, something that you guys mentioned as well about gas snap, and I think it feels like that people are using gas snaps as, you know, a good instrument to just get speculatively short on gasoline, because you know there was like a really and also blenders obviously, but like there was a big surge of like open interest in the last couple of days, and like majority of this flow has been on the sell side, whether it's blending.
Did you go to the entry
spec.
prices?
Yeah, of course. So like this is for September. So the short entry has been like around like 285, and the market is currently trading around 293. So it's kind of already the recent shorts are kind of out of the money.
But not massively, right?
But not massively.
That's probably just betting on a convergence.
There's also surely some hedging in there as well.
Yeah.
Well, this is a big topic in my book. Like basically, like the gas nap roofer last year, no one could understand it, and it was basically getting to what you were saying about Naphtha being a small capacity market. It's massively overwhelmed by the gasoline buying.
Yeah.
That the differential just blew out because there was independent buying in gasoline, and then there was kind of mixed flows in Naphtha, so the differential could just blow out. So you say there's loads of shorts in gas nap, yeah, but like the volume of shorts in gas nap is nothing compared to the volume either side of the differential. Do you see what I mean? Gasoline and naphtha. So it just can't, even though it seems like, well, everyone's selling gas nap, it's like, yeah, but it's still a tiny portion of the overall volumes. So yeah, go on.
I remember having dinner with a customer, and he was saying it's not that the component market just doesn't have the capacity to keep up with the amount of appetite for gasoline. So even if the gas nap is like 700, if you're like physically constrained by,
yeah, but that's another, see what I mean? It always comes back to like they need a fundamental story. It's like it's not a fundamental thing. It's not happening in pricing. It's happening in the deferred contracts. It's just a function of buying and selling. There's too much buying in gasoline. I thought you were going to say naphtha can't keep up with the buying on gasoline with the same token, so it's obviously going to get disjointed.
That's kind of what you're saying. It was basically like there's just not enough appetite for the other stuff that.
Yeah, you can't hedge it. There's not enough
People can't be like, oh, I need to sell this because it's like, what are you gonna like? You're not hedging anything. Because you kind of ran out of things.
No, fair point. Yeah, exactly. No, it's interesting. It's interesting that cycle's repeated again. But anyway, as I say, Q1 story. I think you've just kind of proven that with the data on that Ehsan. So yeah, that seems pretty compelling actually. That if anything, it could continue. Where are we actually in the absolute levels on the naphtha crack in the front?
So in the front we are like minus 13.35, and
the Q4 crack is higher.
Yeah, Q4 crack 12.50, Q1 11.87.
I mean, these are still low historically, as an absolute number. You know, I've seen naphtha crack positive not too long ago, but usually it's around -4, -5. So again, though, you know, the light sweet production in crude is what's been produced more of than sours. So yeah, it's logical that when you come to pricing that naphtha would be weak, but you've got to see that in the premiums. You've got to see the actual evidence of it. I don't think they've been that bad. If anything, you're saying the petchem margins are getting bad because naphtha's too strong, right? So yeah,
on like an outright flat price basis.
Yeah,
and I guess the crackers are like reducing rates, and I was reading things about the closing down. So that is, I guess, that's good evidence that margins are suffering.
Yeah, interesting. Okay, well. Yeah, these things do move in cycles, and I think people tend to have them. It has its move, right? So we had the naphtha sell-off. Likely a lot of it was priced last month, and you just need to go to the next fundamental story or the next whatever story you can attach to and pay attention to that. And in the meantime, that thing that moved a lot can just do whatever it wants. No one's going to pay attention to it anymore. So maybe there's an element of that as well, right? It's like, well, we had the move. Don't really care anymore. It can just drift up on nothing and no one's really going to care. I mean, it's unlikely you would put so much risk on, see it through, and then risk again like the next month. I mean, how many times can you see something happen before you go, okay, I take profit? You see what I mean?
Yeah. And like you say, if it's like a market that tends to have a bull run in the winter, if the gasoline market is strong and, you know, sentiment is good, like why would you, unless you really wanted to take the other side, like why would you kind of go all in short?
Yeah, we're too late basically. It's had that momentum.
I think the differential between the fuel oil and naphtha crack in Q1, that would be very interesting trade, because now with the levels where they're sitting now, like the fuel oil is very, very strong in the front, and you know that differential is usually 3.5% barges crack against naphtha crack. As in principle should be negative, but at the moment that is a bit positive. So like selling that 3.5 against like Naphtha crack in Q1 should be interesting. So you get your length.
Where is 3.5% crack?
Minus 1050
in Q4
in Q1.
And Naphtha is
1150.
Yeah, that's interesting. That's an interesting idea, actually. Yeah,
it's like,
but again, you're banking that there's going to be, people are going to be very attached to the sour crude market story with fuel. It's a very inverse crude trade.
It is, yes, it is. But like it seems like that there are two markets that they're both kind of out of whack, and then you want to get the upside of both markets while protecting yourself a little bit.
But I think you're not hedged there, though. You see what I mean?
Not fully hedged. No,
you'd have to have some kind of crude component to that as well, I think.
Yeah,
maybe you have like a delta hedge fuel crack.
Exactly.
Short fuel, short fuel, short crude.
So you would have like some sort of conversion.
It's a shit trade,
I
can't think of how to make that work. No, I get what you're saying, but the mistake is can be when you just sell something historically high. It's like, just because it's a high number. But I know what you mean. It's causation first, and then you're saying it's a high number as well. So could that be interesting? But
because you are thinking it as like everything as it is, whereas as a fuel crack.
But you're not bearish fuel cracks though.
But my main thing is looking at the position indicators, and position indicators in Naphtha is long in Q1, and position indicators in crack. If I can show you actually on the screen, that would be quite interesting. So like, this is the Q1 positioning in 3.5% barges. Market has been like on an overall basis skewed to the sell side, and also like in the last 7 days, a lot more selling as well. So, people are placing their bets kind of already around those high numbers for fuel, like 1050 in Q1. And, just looking at just purely looking at historicals, technicals, position indicators, it seems like a good trade with good risk reward.
It's a good trend following trade, I would say. It's already on that trend, right? I think that's probably been
maybe
on
something
its way down.
that we put on Alpha today. So
okay, so that actually makes sense. So you could you're got the nice price action momentum, and you've got the position momentum, and you're early in the open interest cycle.
Yeah,
that's a good justification. Cool. I take back my shit trade comments.
I think people are going to watch until that point, and then just stop it. They're never going to hear it that you took it back.
Hopefully. So
with this, you talking about this as like a crack to crack?
Crack to crack, 3.5 against
the flat price diff, really, isn't it?
Unless
unless the problem with doing flat price diffs,
you got different
products, you got different conversions, and you got flat price on effectively.
Yeah.
So that's an issue. Anyway, whatever.
Yeah.
What else? I mean, the latest talk again, like crude is getting higher again, flat price. When I say higher, I mean like meaningfully, like it's starting to get in the news again. You're getting the buzzwords, the SEO kind of warriors working, which is $100 per barrel. These systems are work to say, if you put in an article that says $100 per barrel, you're going to get way more views. So you see when you head towards like 1 million articles coming up, while we're heading back to $100 per barrel. Or 90 actually seems to be.
I think 90 is
seems to be getting a lot of traction. But anyway, oil hitting $100 per barrel is entirely possible. Bob McNally said on CNBC Squawk Box, yep, it is entirely possible. But it's just a bit of a nothing. Yeah, anyone could. I mean, the momentum looks okay. Died a bit of a death in the last kind of week. Actually, interestingly, in BBC News, even though why is the gasoline prices going up again? But again, it's this lag thing, right? So gasoline's had a rally for a while now. You've only started to feel it now because it takes some time to get to the retailers, and then they need to charge on top of taxes and all that. So that's not surprising. But we are going into Q4 trading, not too far away, and then some price relief there. But I don't know what else there to say. I mean, I don't think, as you said at the beginning, it's not a particularly interesting market outside of kind of nuances we were talking about. And then we can say for the US guys trying to get a bit more of a US focus.
There's not a huge amount to say really. It's just like, for me,
they got their rally right. They got the US investors piled in.
Yeah.
Into ETFs.
ETFs, and I think they've like there's been consistent like outflow from the ETFs, like all the people that achieved that they wanted to achieve in those, especially like, you know, maybe it's not even like achieving what they were chasing, like the targets. It was mainly like cut down on the losses, because like at the beginning of the year they put on some position, and then like it didn't go their way. Like Brent and TI have been like really the worst asset class this year to actually get long in, but now that there is this rally, it's probably a good time to just cut down on your losses. And
so what have they lost
in those ETFs? So like looking at the performance of those ETFs, like from the beginning of the year until now,
they're quite in and out of it, right?
There is like long term, medium term, short term.
You could probably do an analysis on like entry levels.
Yeah, I mean, like this outflow out of those ETFs is kind of showing, because like the it's quite significant numbers that like you see like on one day, you know, on Wisdom Tree Brent, there was like $200 million of worth of withdrawal from that ETF, quite significant. And these sort of things doesn't happen. It's like, you know, the in and out of the positions is like very, very much smaller in terms of like monetary value, like 2 million, 4 million, something like that. But like 200 million in one day is quite significant. And that has been happening in the other ETFs too, that outflow. And
so they're kind of responsible for a lot of the rally in the last few weeks, and responsible for the slowdown.
Exactly.
Probably.
Yeah.
So there you go. So from a US perspective, they've been, I think they're very tied to the macro story. We've come out the back of it. If anything, they're talking about cuts now on the Fed side of things. So looking interesting. But then at the same time, they've kind of not been greedy. So interesting.
I think the money is flowing somewhere else, like from crude into like distillates, and then like a little bit
back to equities.
And other asset classes for sure. Yeah, and but like specifically, like if I want to like just go back to the US, you know, that middle distillates stocks is low, and you know crude is kind of overdone, and those products seem to be gaining a lot more traction with the macro story that, right, we're going to have soft landing, so we need to have these industrial hydrocarbons. So there is a bit of a compelling story to get long on these products like ULSD and gas oil, and it feels like the money is kind of going away from crude into those products.
Do the fund this is a question, do the funds tend to position for hurricane season like traditionally?
That's interesting.
Do they look at like
I mean, almost definitely, yeah.
But like, as in, like, is it like significantly? I'm sure they obviously do, but is it like a kind of significant thing to track? Like whether they.
I think Q3 gasoline in general it's not just a oil trader thing. I think it's a fun thing as well. Like buying Q3 at a kind of historical low of the range is just such a good trade, right? It's always performed. So especially when things go like negative in gasoline, and you can buy Q3 a year out. That trade has worked like twice in the past 3-4 years. That opportunity has presented itself twice, and they've done so well out of it. Funds and trade houses for sure. I mean, it's just like if you go back to like classic stories, like even doing that book, The Secret Club That Rules the World. That was a book on commodity trading, like the actual funds and trade houses and all this stuff. And they were saying it was actually someone at a bank who got long the RBOB spread. And then basically Hurricane Katrina happened, and they probably had it looked like they had like a couple hundred grand drawdown, probably to make like maybe $1 million at a max. Then it made like $6 million because of the hurricane, and it went up and set up a fund off the back of it. It's just quite funny. It's not like you called the hurricane. You were in the trade and the hurricane happened, but as if that hasn't made so many people's careers, like those hurricane trades in funds. So I would say. It's almost like treating it like an option, right? I don't think people do any RBOB options really, but if you treat it like an option, you know, risk reward on RBOB cracks when they're at the lower of the range, when you know there's a hurricane season upcoming, it's just a no-brainer really, isn't it? And you tend to get that US demand season, which always seems to outdo, no matter what anyone says, you know, you always get this demand. It
always like the price action always suggests that it's always been undervalued.
Yeah.
Even though like
crazy,
being long gasoline every year is like seems to kind of work basically.
Well, I think it's the volatility that burns people, so they don't want to. Yeah, and the other thing is that interesting thing about gasoline is definitely on the swap side as well. There's no natural buy side hedger because the buy side hedger is the everyday people.
It's like us, and
we don't have the everyday person doesn't have the ability, like, well, not yet, like Revolut, to be buying gasoline. Maybe one day, but the point is that if you've got no buy side hedging, then the guys who have to buy it have to be speculators or trade houses. But ultimately, trade houses, they have to warehouse it or sell it at some point. So most of it is going to be speculation, and in a speculatively driven market that has no buy side hedging, it's obviously going to wang. It's going to be like crypto, right? So, and it is like crypto. So that's probably why it tends to, you could just let people stop out, let people to buy into hype, and just buy when people stop out. And you could trade gasoline so technically. And I think a lot of people do trade it technically. And it's still a good market for a lot of people on that basis. But then that's the beauty of like EBOB as well. You can buy things and just price them out. So you refiners need to hedge. If you catch them hedging at a moment that's low on the EBOB crack range, you can buy it off them. They're going to take it to settlement. You're going to take it to settlement, and you'll do really well. That's the move you want to catch. Whereas if you trade with a speculator, there's all this human stuff going on. Like, could they sell more? Could they protect their position? Could they do things into pricing that they wouldn't have already done had they not had a position? There's all these things going on. If you catch a hedger who's like just doesn't care, that's the ultimate thing. So ideally, you want as many hedges as possible, hedging at the low end of the range, and the buy side speculators buying and holding.
Because they do, like, the gasoline market likes a kind of
loves to be long, but
it loves a pricing month.
Oh, I see.
Play as well.
Yeah, I mean, yeah. I guess being short gasoline is dangerous, like in a way, right? Because you can get sudden spurts in demand, and like there's these. Yeah, I know what you mean. There's different contracts have different susceptibilities. Like WTI has a susceptibility to be oversupplied because it's landlocked. Dated Brent historically was susceptible to being blown out because of it only had a finite number of parcels. Kind of changed now because there's so many WTI barrels. Yeah, but yeah, I know what you mean. Every
I think where I was going with it was like, and given that most of the spec stuff is long, most of those plays are likely, you're more inclined to think that if anything, people are kind of going to bull play the market. So like it's just a good market to be long most of the time.
Yeah, it's just catching at the right time. Yeah, cool. Well, thanks for coming on such short notice.
Yeah, no worries.
And thanks as always, Ehsan. Ish. so today. I'm joking. Good stuff. And thanks, listeners out there. We'd actually love some suggestions, wouldn't we? Things to talk about. We'd love to be a bit more US focused because we kind of realized we're not talking a huge amount about what's going on there, and it's an enormous market. So what do people want to hear about in the US, and so. But we'll leave it there. Thanks very much for your time, and speak to you next week.
Cheers.